Hello everyone. Now we will continue our lease course with definition of the lease by ASC 842 Leases. So what is a lease? A contract is or contains a lease if the contract conveys four different components. The right to control the use of identified assets for a period of time in exchange for consideration. And with any lease contract or with contract which contain a lease and a bunch of other stuff, we have to consider all four of these components. If there is like a failure in any of these components, we might not have a lease. So if our asset is not identified, or if we do not get the right to control the use of an asset, or if we have issues with period of time or with consideration, and any such issues can indicate that the contract doesn't contain a lease. So what does it mean to contain a lease in a contract? It means that we should apply ASC 842 leases to lease component of such contracts. The contract might have other components, not only lease but like revenue components or expense components, and in that case we apply other guidance. And in case the contract doesn't contain the lease, in case we have some issues with any of these components, we just apply other relevant guidance which we identify. However, even if the contract doesn't contain the lease, we need to know ASC 842 to be able to conclude that. So what questions do we ask ourselves when we look at the contract which we think contain a lease? So first of all, are we able to identify an asset? For example, if we rent a car for a Hertz and the car is specified and Hertz doesn't have the right to replace the car, substitution right, then it's probably a lease, depending on other components. But if we just use an Uber app and Uber has the right to change the asset, we are most likely buying a service which will be expensed, while a long-term rental of a car might be capitalized as a lease. Now, the second question for the second component. How do we know if we got the right to control the use of an asset? We will give a quick answer, high-level answer on that question later in today's video. Okay, the next question. How do we determine the duration of the lease? What if we have perpetual agreement? What if we have pay-as-you-go agreement, right to extend? What if we lease an asset for a couple of months in a year for 5 years? What do we do in such situations? And the last one, consideration. What do we include in consideration? For example, if we pay rental fees and utilities are included, which component is a lease component and which component is an operating expense component, and which amount should we use to calculate fair values or like amounts to be capitalized. So these are the factors to consider, these are the questions to ask. Let's consider a couple of examples. Lease of a car. So this is a right to control the use of identified car. So the car should be identified and we should get a right to control it. And the period of time of the lease should be specified and the payment should be specified, and we should be able to judge what is included in the payment. Are any maintenance fees included? Gas, driver. Another example, rent of an office space. So we should get a right to use identified office space. For example, if it's a separate building, it's one situation. If we sign a contract with some co-working where our place is not specified, so we just have to take like any free space in that co-working, then we might not have a lease here. It might be just an operating expense. But we need to consider all the factors in this situation. And we also rent it for a period of time, specified period of time, and we have consideration to pay. Okay, let's look in more details on identified asset. So to meet the definition of a lease, an arrangement must require use of an explicitly or implicitly. So it can be explicitly by like serial number or implicitly identified asset that is physically distinct. The physically distinct parameter is an interesting one. For example, if we rent a space in a warehouse or an office in a co-working, there are certain clues which we might look at to make sure that the physical asset or physical space is identified. So if we have a separate space in a warehouse, that it's more or less identified. If not, we might not have a lease here. Same with the office in the co-working. So if it's identified, if it's a fixed place in that co-working, then we might have a lease here. If not, if we just take whatever place is available, then we are probably not having a lease here. Moreover, the existence of substitution rights may result in the determination that a specific asset has not been identified. So, existence of substitution is an interesting one too. So, if we rent a car, but our rental agency has the right to replace that car anytime based on their own decision, and it is economical for them to replace, then we might not have a lease in such situation. If a contract explicitly specifies the assets to be used by serial number or specified floor or of a building, the contract contains an identified assets unless the supplier has substantive substitution rights. In certain circumstances, an asset can be identified implicitly. For example, when the asset is unique, cannot be feasibly replaced with another asset, or is specifically fit for customer need. If you think that you deal with implicitly identified assets or substitution rights, refer to the guidance and examples in the guidance. So always refer, when you deal with something new, always refer to the guidance. Now, the second component, the right to control the use. So ASC says that to determine whether a contract conveys the right to control the use of an identified asset for a period of time, an entity shall assess whether throughout the period of use the customer has both of the following: the right to obtain substantially all of the economic benefits from use of the identified assets, the right to direct the use of the identified assets. So two components. The right to control the use consists of two components: the right to obtain substantially all economic benefits and the right to direct the use of the identified asset. The customer can obtain economic benefits from the use of an asset directly or indirectly. So directly or indirectly. Part A, the right to obtain substantially all. Customer can get it directly or indirectly by using holding or subleasing the asset. An asset can generate different streams of economic benefits. If an asset generates several substantial streams of benefits consumed by different customers, neither of the customers might have the right to obtain substantially all of the economic benefits. The customer will generally be deemed to have the right to direct the use of the asset if during the period of use the customer may operate the asset or may direct others to do so without the supplier having the right to change that right. The customer will generally have decision making as to whether to produce an output, what output to produce, when and where to produce an output. So again, the right to obtain substantially all if the streams from an asset are split between several customers, we might have an issue with that, and the right to direct the use of the identified asset. So if the supplier of the asset, the lessor, has some substantial right to direct the use of the asset, and if a customer is not free to make certain decisions, then we might have an issue with that, with the right to control the use of the asset. Period of time. So period of time is the total period of time that an asset is used to fulfill a contract with a customer, including the sum of any non-consecutive periods of time. So for example, we can lease some asset for 5 years, but only for, let's say, December, if we need some extra supplies for holiday season. And that will be a lease contract, but we will only have a lease in December. A period of time might be described in terms of the amount of use of the identified asset. For example, the number of production units that an item of equipment will be used to produce. So that's true. It's not only days or months or years, it can also be the amount of the output. Control over the use of an asset can be for a consecutive period, non-consecutive period, or a portion of the term of the contract. And the last component, consideration. Lease contracts may contain non-lease components that should be accounted for using other accounting models, like common area maintenance or service such as security. Only the components that are integral to the right to use an underlying asset are considered lease components. For example, if we rent an office space from the business center and we just pay, say, $10,000 for that space, and we do not pay separately any utilities bills or maintenance or cleaning services, it might mean that we have quite a few different components in that payment, and only a portion of that payment should be actually allocated to leases. ASC 842 requires a reporting entity to allocate the contractual consideration between components of the arrangement. Distinguishing between lease and non-lease components is also important because it is not always appropriate to record assets and liabilities associated with the non-lease components. So that's all for today. I advise you to learn that definition by heart and remember what are the components of the lease, so when we can conclude that the contract contains a lease, and you can read a couple of these examples and access the guidance and read examples from the guidance. Thank you. That's all for today. Please subscribe to my channel and like this video and turn on notifications. Thank you and have a great day.